before I get started, please let me tell you about something about the banking system, something related to money, something related to credit, so that the story is clear in your head and you are in a position to answer the question. Of course, there are two sources of credit. It may be formal, it may be informal sources of credit. So when I talk about credit, yes, you guys know it can be informal. That's money lenders, and then you get into debt trap, and the second one is going to be the formal sector, where you have the banks, the cooperatives, communities, or any sort of organized setup where you have to follow the certain steps in order to get credit, in order to get money. So guys, before we talk about credit, do you guys know there's a difference between debit card and a credit card? Both the cards offer you money, but when it comes to credit card, the limit that you have in your bank account, you can overuse that limit, you can get some extra money. But in debit card, whatever money is there in your bank account, you have to restrict, you have to stick to that amount. When I talk about money, you guys know in Indus Valley civilization, we used to have a system that is known as a barter system. Yes guys, talking about that barter system where there was double coincidence of want. You need onion, I need tomato, only then we guys can trade with each other. Or there was no store of value, because I can't associate how can a bottle of milk be exchanged with 2 potatoes or maybe 4 potatoes. So I was not having a medium of exchange. But in this case, now when we evolved and worked forward, moved forward, money made life really easy, because you can store money, you can have a saving account, you can have a current account in bank, and it can also act as a medium of exchange. Like it's a fiat currency that's accepted by the people in the country. Nobody can refuse it. It's also act as a fiduciary. Indian rupee also acts as a fiduciary amount because it has the backing of the government. So that means even though Indian rupee is having its support of the government in Indians' domestic territory, it might not be accepted in US economy. Why? Because there the legal binding or the legal backing is provided to US dollars. So yes, both the countries individually have their own set of currencies, but it happens that one set of currency might not be accepted as a medium of exchange in the other country. So that is a drawback when it comes to money. So see, I have this topmost bank when I talk about India, that is RBI, Reserve Bank of India. That's the Papa bank or the father bank for all the banking system, may it be commercial bank, may it be a cooperative bank, any sort of bank. So what RBI basically does, it keeps a check on the banks lying, under it, that are they doing justice to every section of the society, or are they trying to make some profit out of it? By which I mean to say, the banks lying under RBI, it may be a commercial bank, and we can also differentiate into cooperative banks. So what basically these banks do is they try to make money by lending the money to big businessmen. So this is what they do, and they tend to ignore those sectors, for example micro, small, medium enterprises, the agricultural sector or stuff like that, from where they might not get back money. Right? So RBI has to ensure that every section gets their due credit whenever they look for money, and they don't land into the trap of the money lenders that are there in the informal sector. So RBI does that. It has the banks have to follow the supervision, the guidance of RBI. They have to follow whatever instructions are given by RBI. So this is all about RBI. So when I talk or when we speak about RBI, something else comes to my mind, and I want to tell you what is it. Let's say I am an individual and I want to open an account in a bank. So this is a bank. Whatever bank is going to accept from me would ultimately be lending that out, let's say, to a big businessman. So if the bank promises me, okay, whatever you're gonna, provide us money, whatever money you're gonna provide us, I'm going to give you, let's say, 5% rate of interest. So that bank, whatever money is there, is going to be, handed over to a big businessman for long term, and it would be fetching around 10% rate of interest from them. This is how a bank would make money. So of course 5% would keep it with itself, and 5% as promised to me, it would be returning the money, the interest to me, because I have provided money. So that money that has been provided by me has in return worked as an asset to the bank, and yet it is a liability for this particular bank because they anyway have to return it back to me. So it also acts as a liability, it also acts as an asset. Is everybody clear till here? So apart from asset and liability, I would say that in a bank I have two kinds of deposits. The very first kind of deposit is demand deposit, and the second type of deposit is time deposit. For example, you have your FDs and etc. So when I say you have your time deposit, that means for specified time you guys are going to keep some amount with the bank, which bank can automatically use for its own profit making business and lend out to some businessmen. That means in time deposit you assure the bank that I'm not going to ask for the money back for a specified time. That means you can use it for your commercial purposes and earn money out of it. Then of course if the bank is going to earn money, it's going to anyway bring it back to you. And when I talk about your demand deposit, if you guys have used your ATMs, there it asks you if you want to withdraw your money from your current account or your saving account. So either it's your current or your saving account. That means you're not sure how long you're going to keep the money with the bank, and you can pull out or withdraw the money on your requirement, as per your requirement. So of course in demand deposit, you don't fix the amount, put the amount with the bank for long. That means the bank does not have money with it to be forwarded or to be credited to a businessman and make money out of it. So in return, bank does not offer you the required interest rate. So this is how the cycle typically goes. In demand deposit you don't earn good rate of interest, whereas in time deposit, yes, you earn good rate of interest. So this is the entire story of this chapter. Let's get started with the first set of question, that is, in what ways does RBI supervise the functioning of banks? Why is it necessary? So right towards the start of the lecture I told you that Reserve Bank of India is like the apex bank of India. It's like that bank that acts as a banker to the government whenever the government needs money. It acts as a banker to the other banks whenever they require money, and it is like the sole authority that can issue all the currency, because of course you can't issue print notes for no reason. It's going to create a situation of volatility, it's going to create a situation of inflation, and that won't be good for the economy. Imagine everybody in your class gets money, for example 500 rupees, and in your canteen you just have 2 samosas. So automatically the cost of those 2 samosas that was supposed to be 20 rupees would automatically be raised up to, let's say, 700. So whosoever pins or comes up to the level of 700 can only afford it. So you have limited supply, and if the demand probably increases, that's not going to solve the problem. So printing note does not does that. So talking about this, the section has been divided into this question has 2 parts. The very first one is RBI in what ways. So in what ways, that means, see, all the money that you offer to the banks, they can't lend out the entire money. They have to keep some amount of the money with themselves. So if a person comes and tries to withdraw the money, the bank never says that I don't have your money, or today I am not in a mood to return back your amount. So yes, RBI ensures that the bank do not default on their payment, and for that they have to keep certain percentage of the cash reserves with them or with the RBI, Reserve Bank of India. Second important point is that yes, we discussed that the banks are supposed to give importance to the small scale industries, the small borrowers, or maybe the farmers who are not become so competent enough to offer, to give back loan on time. So that is why the banks also feel discouraged that we won't be offering it to a sector that is already loss making and we won't be making money out of it. So RBI probably keeps a check, and also a periodic report has to be submitted to RBI on how much they have lent, to whom, and what is the rate of interest, just to check that everything is going well. And why do you think all this is necessary? Yes, the central banks, like I told you, it acts as a lender of last resort, because the government or maybe the other banks can automatically get money from RBI. So it is the central clearance system for settlement and transfer. So RBI anyway has to supervise the banks, because it is that authority that issues the paper currencies, it is that authority like that supervises hundreds and hundreds of banks that are functioning on the territory of India. It also ensures that the profit that is made by the banks is equitably distributed, that the unattended section or the section that is lagging behind does not face a lot of further discrimination. So for the appropriate and timely use of credit, or maybe to ensure that there is no volatility in the economic situation, it is necessary to have an appropriate policy that is formulated by RBI so that the credit flow is good enough. So here I have answered the second part and clearly differentiated the first part also. So on that note, let's get started with the second question. Why cheap and affordable credit is important for countries' development? Explain 3 reasons. So we have a lot of section of people who are having situation where they can't get money. They don't have good paperwork. They are not aware of how to go around with the paperwork, how they are being exploited. So it's basically illiteracy and poverty that go hand in hand. So a farmer, if I would say, if there's a farmer who has to take loan, and because of that crop failure, he does not have some collateral that can be offered to a bank to ensure that yes, they get the amount back. Now what happens is, earlier they used to sell off some part of their land to make sure that they repay the payments even if there's a crop failure or something of that sort. So if I talk about 3 important reasons, is that we need a formal system of credit. This answer would also go in if they ask you why there's a need to inculcate the formal system of credit, or to come up with the practices of formal system of credit rather than following the informal system of credit. So the very first point is, it would automatically bring that person out of that vicious cycle of debt trap, where they get trapped into the money lending process and they have to borrow more money in order to ensure that they can repay their previous debt. Second important point is, it would lead, if they're getting money from a formal source of credit, it will lead to higher income of the people, and if they can borrow cheaply, they can work on their own skills, have their own business, set up their own industries. So yes, if there's a formal mechanism, we can offer them different sources of livelihood for that matter. So this answer is also applicable. These 3 points are also good to go when they ask you a question based, why is it important to have a formal system of credit and how is it going to help the people? Okay, on that note, let's get started with the next question. Explain 4 terms of credit with examples. So do you guys know the 4 terms of credit? So if you have to take money, what all do you need? You have to take care. It's like the terms of credit. These are the terms and the conditions that relate to the loan when a person or a borrower has to take money from somewhere. So you have to give a definition of let's say what do you understand by terms of credit, first point, and what are the 4 basic terms associated. First is going to be the interest payment. clearly mentioned, because they asked for the 4 points and I have segregated it like this. It's going to be the interest payment, then it's going to be the collateral. Collateral is something that you keep as a security. Third is going to be the documentation, that is very important. And fourth is going to be the mode of repayment. So these are the 4 important points. Very easy question that can be asked in 1 mark. Second question is, see, before I have jumping on to the next question, I have explained it right here that, you know, before the banks offer any loan to a borrower, they have to specify certain conditions, certain requirements have to be fulfilled, so that the person who is availing the loan is probably aware of the repercussion if he is not in a position to repay the loan. So the banks can retain the papers, whatever mortgage or collateral you have offered, and they would probably submit it back to you if you repay the loan. However, you won't get those papers back if you are not in a capacity to make the payments back to the banks. So that collateral is going to act as a security for the loan that you take from the bank. Alright, so on that note, let's jump on to the next question, that describe 4 advantages of self-help group for the poor. So see, all the poor people individually cannot go and borrow loan, because as I told you, they are not aware of the documentation, they don't have the collateral, they are not aware of how they are supposed to fill the form. But if a group of poor people or needy people, they come together, so of course they won't have issues that they probably are facing now. So first you have to give the explanation of self-help group before you jump onto these 4 points. That is, a self-help group is a group where people come together to pool their resources and help each other by offering the loan as and when it is required by the member of that group. That is going to be all about the definition. That's the introduction part, and then you can jump onto the 4 important points. Let me highlight the important stuff. For example, pooling helps in promoting the savings, so you can save a lot, because in small manner you guys can improve on your savings. Second, you can get timely loans. Third important, it helps to overcome the problem of lack of collateral, because the people have a mutual trust among themselves, and it also helps to address a variety of social issues that is there of their common interest. So these are the 4 important points. So yes, you have to give a good conclusion that over the years self-help groups have gained a lot of importance in India, because this acts as a best platform for the people who can't get hold of the formal sector of credit that easily. Okay, so let's jump on to the next question. How does the use of money make exchange of things easier? Explain with examples. So as I told you, in barter system we never had fixed relation as to what quantity is going to fix with the other quantity. But when I talk about money, it not only acts as a medium of exchange, but it also acts as a medium of payment for goods and services. So it's like any payment that you have to make, the money is accepted by the people across the country. So a person can easily exchange money with any commodity that he wants, with any service that he wants or is looking for. So yes, it is an intermediary phase that helps you secure the stuff that you are looking for. It gives a guaranteed price that is mentioned there on the commodity. So however, the value remains constant, like 10 rupees is always going to be 10 rupees, 20 rupees is always going to be 20 rupees. Plus you can also store this. Store this means you can store it in the form of your demand draft, you can store it in the form of your saving account, you can store it in the form of your time deposit. So this acts as a store of value. On that note, let's get on to the next question. Why are transactions made in money? Explain with suitable example. Okay, so the way we answer the last question is going to be the same, that transactions are made because money is accepted as a medium of exchange, as a mode of payment, and you can get any commodity, any service at your place with respect or with exchange of money. So the value is going to stay fixed, and the same set of points that we just covered back can be used to answer this question also. But please try to explain it with the help of an example, because this is what they are expecting out of you. For example, money solves the problem of double coincidence. Like, it's not important that the other party would also be looking something or expecting something out of you when you are offering something to the other party. So it's like, it's sort of helps resolve this issue of double coincidence and acts as a medium of exchange. All right, so let's get on to the next question. Why are modern forms of money currency, what are the modern forms of money currency in India? Why is it accepted as a medium of exchange? How is it executed? Okay, so of course, answering the first part of the question, you guys know that the modern form is paper note and coins. Why is it accepted? Because it is authorized by the government of India. So the second question is accepted because you have to underline it is authorized by government of the country. And third, how is it executed? Execution is basically done under the control of Reserve Bank of India. So this is again a very important question which can be asked in 3 marks, and it can be divided, and 3 questions can be formed out of it under the category of 1 mark. So in this case, yes, everybody is bound to accept whatever rules and regulations are set by the central bank when it comes to circulation of money. Jumping on to the next question, analyze the role of credit for development. So of course, credit, that is money, is very helpful for the development. It probably helps you come up with a lot of infrastructure. It helps to solve issues related at family level, at the government level, at the local level. So yes, it is trying to resolve a lot of issue. Now, how is it being used as a source of development? I would say because development needs money, development needs credit. So I have given a very good example that there is this shopkeeper. Credit is helpful because the shopkeeper who receives a large order of garments for his within a month. So of course, if you have credit, you have to you'll be in a position to increase the production. You will be if you have credit, the people are there to buy your goods. So thus I would say that if you have credit, you can also make sure that the payment is not can be post dated also. Like, you have the payment with you in your bank account, and once you get the supply delivered at your place, then you can repay the payment on a much later day. So I would say that cash loans can be used, loans can be offered, and stuff like that can be done in order to ensure that development takes place. Everybody is getting their due share, their due credit. Everybody is participating in the growth, in the development of the country, and that can only take place if you have sufficient credit in your bank account. That means you have sufficient loan at your stake in your bank account. So automatically you're going to make money and you're going to take your business to the next level. All right, because business anyway requires a lot of investment. So credit here would automatically mean loan. So here you're talking about credit. Now the crux is they're asking how loan is going to help you. All right, so the same next question, that Manav needs a loan to set up a small business. On what basis will Manav decide whether to borrow from the bank or money lender? So what do you think is going to be the set of conditions? So they want to check your knowledge, your understanding. So they want to know if you guys are aware about the formal and informal sources of credit. So in this case, of course, the documentation is very important. If you go in for a formal source of credit, that is through the bank account, but the option is that the rate of interest that they offer to go in should be quite reasonable. if he cannot provide the documentation, if he does not have the required collateral also, then of course he would have to depend. You have to cover the second section also. If there's no documentation, no required source of information that is with him, so he'll automatically have to turn or depend on the formal sources of credit, which at times might take advantage of your situation and asks for high rate of interest. And even these people, the money lenders, at times they use unfair means to get their money back. So it's like the more you delay, the more you get into vicious cycle of that debt trap, and it's very hard for you then to get out of that informal sector. So the only pain is about the reasonable rate of interest, and you have to have proper documentation if you want to go forward when talking about a formal sector of credit, that is through banks. Okay, so on that note, I'm going to end this discussion right here. The PDF link for this discussion is there in the app, and the download link for the app is available in the description box down below. So you guys can ask any doubt. You can get free access to study material and also get hold of other videos that are coming up next for the discussion of social studies. So until we meet next, I see you in the next video. Thank you so much for joining. Stay healthy, stay hydrated, and study hard, guys. Bye bye, take care.